Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that the market has just rejected exactly the previous high. From here, all this previous rejection to the downside was created. At the moment, the market just tested the exact same level, started rejecting it to the downside, and at this point, since this previous monthly resistance turned support seems now to be breached to the downside, we could expect more bearish continuation. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can see how the market has just created this overextended M pattern. After the creation of an overextended M pattern, we could expect first a correction and then more bearish continuation. In general, after an impulse, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg. And if we do that, we can see that we haven't retraced to the 0.32 yet. So we could expect a bit more bullish price action and then the continuation to the downside. So we could expect short-term bullish price action and then longer-term bearish continuation. Dropping down on the daily time frame, what do we have? Now, from a daily standpoint, we must notice how at the moment this market is in fact testing support. From here, all this previous rejection to the upside was created. Again, here the market tested its zone and it held again as support. And at the moment, the market is testing the same level and has already started rejecting it to the upside. Now, if from here we will actually see a move to the upside, that would be perfect, because essentially what we would have is the deeper correction that we wanted to see on the weekly time frame, and here on the daily the market would create a W formation. And what we know is that in general, after the creation of a W formation, we have a high probability of getting a correction lower for the completion of the W formation at the neckline, so the previous resistance turns support here from a daily standpoint. So if the market will create this move higher, then we could expect a potential rejection to the downside for the market to complete this W formation at the neckline, which is essentially this level here. So this previous daily resistance turns support. Now, if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and we check the data precisely for the JPY, we can see how with the last reports, net positions have been increasing. We went from having minus 130.2k net positions all the way up to having minus 64.9k net positions, with 3,500 longs added from an institutional perspective with the last report on the JPY and 12,721 shorts getting closed. So institutions are opening longs and closing shorts on the JPY, meaning that essentially they are shorting USDJPY, because if they are longing the JPY and every currency on the spot is traded against the USD, they are actually shorting USDJPY in order to long the JPY. That is quite clear. So clearly USDJPY is getting weaker. So if we will have the creation of this W formation, we could expect more institutional longing of the JPY, so shorting of USDJPY, which at that point would further increase the probabilities of a potential rejection to the downside and the completion of this W formation at the neckline. So if we will have the creation of this W, how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what I could be doing potentially is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to me one of my valid entries, at that point, I could be looking for a potential move lower for the market to complete this W formation at the neckline, which is this previous resistance turn support here from a daily standpoint. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses, with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns, the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible, and I will see you in it. The link is both in description and in my bio. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.